Welcome back to the What the Futures podcast. Thanks for tuning in here once again. We talk more tariffs this week in episode 62. We talk Trump tariffs, impacts to consumers, impacts to farmers. Another tariff episode. It's probably not going to be the last one. It's important stuff. We have to talk about it. Chuck Penner with LeftField Commodities joins me here for episode 62. Chuck and his partner John have been working and doing analysis on what crops are going to be impacted the most, what Canadian crops could be impacted the most with tariffs, and which ones could come out of it in just as good or even maybe better shape. I know it, folks. I know it's a big topic. Welcome into episode 62. Let's keep it rolling here. Let's get into it. Hey, folks. Welcome to the What the Futures podcast, your quick guide to better farming decisions. All right, folks, welcome into episode 62, recorded in the UPL studio each and every week. February 15th is coming up quick, folks. Grower Rewards Program deadline with the folks over at UPL. Reach out to your retail, whoever you're dealing with, or your UPL rep, and get the details. It's a lucrative program. You got to reach out to them, though, and get that sorted out and figured out. Of course, I'm your host, Ryan Denis. I've worked with farmers across the prairie provinces, and for the last, I think it's 15 years now, 16 years, something like that. And analyst in the past, led a team of advisors, crop marketing advisor myself, and also bought grain way back in the day too. So haven't done it all, folks, but I've done a few things in the industry. All right. If you could do me a favor, just share the episode with somebody in the farming industry. If you're finding value in these episodes, tell it to your friends and neighbors. You just never know if you may help them out on a decision. All right. Obviously, a big show. Chuck Penner here this week to talk about more tariff stuff. And I know that you're going to get tired of this topic. But the implications, the impacts. All right, let's just start with the impacts here quickly. If I could go off script here for a minute. And not that the episode is scripted, but I'm definitely going to go and just switch this around real quick because I wasn't going to talk about this right away. But just look at what the canola market did over the last, number of days, or even over the last couple of weeks, right? Like we're trading, it hasn't even been that major, but we hit a low here of 623 as of recording. We're trading around 645, like 50 cents a bushel. There's decisions here being made each and every day based on these tariffs and based on the information that we're going to talk about this week with Chuck. And it's important. It's important stuff for you and your farm. We have farms doing the safety sell where they're out there making sales just based off the unknown. And I get it. I understand that. I definitely get it. But my message to farmers here and to the Lunchbox crew has been, this is a lot of noise. This is a lot of noise that is trying to get you off your game. We got together in December for the Crop Marketing Made Cool conference, and we talked about writing down plans, always conveniently located as my crop marketing handbook here, but workbook, but writing down the plan for the year and multiple years because helping guide the ship here and the decisions and avoiding some of the noise. You have markets in an upward momentum. Corn, soybeans, wheat, Minneapolis, Kansas, Chicago, everything upward momentum. Canola, maybe not as much lately, but still giving us chances towards the high end of that short-term range. But even people's looking at canola saying these charts are looking good. This canola chart, actually, if you look at it, it looks like it's in a bit of an uptrend as well, right? And so my message here has been about momentum and just recognizing the momentum of these markets and making decisions based off your plan and just acknowledging that momentum. Can the tariff change the momentum? 100% it can, but it's just noise right now. It's noise. Is it having impacts out there? Yes, each and every day, on farmers' selling decisions, on crop input prices, on some of the deals that are not happening now because of the potential of tariffs from our merchandising groups out there. Like, it is having impacts each and every day. But just if I simplify it to just farmers and selling crops and buying inputs, we could put that in there as well. Just try to avoid the noise as best you can and focus on the momentum out there. Farmers were asking questions this week, about wheat basis. I'll talk about that later in the episode. Farmers wanted to talk about some of the impacts here. That's why I've got Chuck on the show this week. Obviously, a great guest each and every time he joins us. Chuck and his team, John, they're putting together a report here. Go to their website, leftfieldcr.com. Sign up for the free trial if you haven't done it before, and see what crops are be more impacted or less impacted by the tariffs. That's what we talk about in today's episodes. All right, Chuck, welcome back to the What the Futures podcast. I see you got a little different background today. What's going on, man?
Well, sitting in a hotel in Saskatoon. I love Saskatoon, but working remotely kind of sucks because trying to work on a laptop. Usually, I have 3 screens in front of me. And
all right, Chuck, on the road. Everyone's been dying to know, when it comes to tariffs, is India extending the exemption moving forward?
Oh yes, that old India. That's,
I guess,
front and
a
center
duty.
right now. Yeah,
maybe it's a duty. I don't know what it is, but whatever that is.
Call it there. Yeah. Well, yes and no. I was talking about that a little bit with Sask Pulse Growers folks yesterday, and that was essentially. I mean, the Indian government is always trying to balance between keeping consumers happy and keeping farmers happy. So they're trying to find that sweet spot in prices, and of course, any market manipulation, just generally doesn't work, and so they don't tend to get there very much. But I look at it in a couple of ways. So one is looking at crop prospects in India. So if they have good crop prospects, that they should have increased production, increased domestic supplies, increased odds then that they would put those tariffs back on. Now, when I look at their planting of their Rabi crop, which is in the ground now, and some of the early stuff will be harvested now in February, their acreage was down for peas and for lentils and for chickpeas compared to last year. So, and when you look at satellite vegetation maps, you see that conditions are better than average, but worse than last year. So, if those are any indication, that would suggest, the yield should be not as good as last year. Last year was a really good year in India, but better than average. And so you have lower acres, and you have, lower than last year's yields. So you'll likely have smaller crops than you did last year. So that's a positive signal or a positive sign of what they might do, if that's going to be their criteria for what they do with tariffs. But the other one is prices. So you look at prices, because that's what they're trying to control, is what goes on there. And yellow pea prices have continued to just trend steadily lower in India. And with low prices, that means they have more incentive to put tariffs back on to keep out imported peas. At the same time, Desi chickpea prices in India have also just have really fallen off the cliff, because all of these Australian chickpeas are now coming into India.
Right.
And so that's sending the opposite signal that they might put tariffs back on peas, at least peas, maybe. So just to back up, the deadline for peas has been kicked down the road to February 28th. Yeah, there's going to be a lot happening that day, isn't there?
Big day. Yeah. Maybe take the day off, Chuck.
Because there's stuff in the U.S. too, apparently.
We'll get to that.
But then for lentils and chickpeas, that deadline is end of March. So those are the kind of two things. Now for lentils, production is probably going to be down, and the prices there are just flat, and it's some pretty good levels. So I would say that the largest odds would be for them to put tariffs on yellow pea imports, little less likely for chickpeas, which doesn't concern us directly, and then less yet for red lentils. So that would be my order of whatever. So the lentil market is probably seeing the least risk that way, and then the yellow pea market maybe seeing the most risk that way. If that makes sense. Yeah.
Okay.
So yeah, it's there's conflicting signals essentially. With lower production, but also lower prices right now.
And maybe it's a situation where they they put it back on for a period of time, and then maybe it's revisited later on this year. And
but the problem is that, like, especially for peas, they've done it. What is it? Three or maybe 4 times now. They've extended that deadline. And so last time was like from end of December to the end of February. Like, how do you trade properly with that kind of short? Like, if they'd say even 6 months, that helps. But because it takes basically 6 weeks. I mean, it is based on the date that the bill of lading happens in Vancouver, but it takes about 6 weeks to get peas from Western Canada into India, and your window is 2 months. So it's it really makes that trade difficult. And the other thing I would say with respect to yellow peas is when you look at where yellow pea prices are in India right now, even if they started importing more, like, we wouldn't see a bump of $1 or $2 in yellow pea bids, because prices in India are so low that they would just say, no, we're out, or we're going to Russia instead, or whatever. Yeah.
I also wonder, and listeners, maybe they would share this or not, we'll see, but like, who has yellow peas left to market across the prairies? Like, I don't know what that percentage would look like, but I know I would have to make quite a few phone calls to find somebody sitting on yellow peas, or a significant amount of yellow peas.
Yeah, I think we've had really good selling early in the year because of India. But there still are some out there for sure. We're going to be down to fairly low supplies by the end of the year.
Yeah. Okay. Well, let's keep talking tariffs here. I feel like I lived like a crop marketing life on the weekend, and then I lived another crop marketing life on Monday. And apparently it's Wednesday now today, but it's been a bit of a week. I saw on X that you were doing a little bit of work here when it came to U.S. tariffs and some of the impacts. How are you taking these last couple of days, and anything kind of standing out for you?
Well, in our weekly reports, our different weekly reports, we're essentially looking at how exposed certain Canadian or all Canadian crops are to trade with the U.S. And not only that, but then from the other side, how reliant is the U.S. on Canadian products or Canadian imports, right? But I was writing these reports. I was writing the first one and was working on it on the weekend, and then again on Monday. And I think I rewrote that introduction, I don't know, 3-4 times, just because it's, well, maybe, you gotta, no, it's happening. No, it's not. Or it might still. And it's just, kept you on your toes. That's for sure. I don't know. It's my gut instinct tells me the fact that we got this 30-day reprieve suggests that there might be a little more thought that will go into it eventually, a month from now. That could mean that there still are tariffs, but they might be, there might be carve-outs, certain things exempted, or certain things at lower rates and certain things at higher rates, just like they did with oil at 10% and, everything else. But I think there might be more and more thought going into that. The other thing is that, because of this, Trump can claim that he has had a win already with Mexico and with Canada. And so therefore, his ego is satisfied and he can, get
for now.
Get political. Anyway, but he may move on to other topics now, or the Middle East. Apparently there's something going on there too.
Let's not get into all that today. Holy smokes!
Politics, no kidding.
Yeah.
So anyway, so that's kind of we're trying to. There's a whole lot of guesswork going on.
Yeah.
But that's what we were trying to do, is figure out if they happen, then what would be the exposure.
Sure. So January 20th, we got word that he was kicking it, or maybe it was the next day, kicking the can down the road for whatever it was, a couple of weeks. And then now it's kicked down the road for a month. It does show, not a change in posture per se, but it does show that there's maybe more to this than just, where do I write 25% down and sign it and deliver it, right? There's more to it. So, there is
still a talk about this April 30th thing, where the U.S. Trade Representative will have had some input. They're coming back with a report April 30th. So it could get kicked down the road again to the end of April.
Yeah. Yeah. So, I was chatting with growers over the weekend and early this week, and with a few other analyst people as well. And, my trade was, if tariffs were on, my trade was, go long on oats or be bullish oats and cattle, and, be bearish, canola. And I didn't care about wheat a whole bunch. And then maybe corn, depending on Mexico. But I saw oats just kind of shoot up, in the day that, leading into the potential for a tariff. And I thought, hey, I almost got one right there. So is that one of the crops that is highlighted in some of the work you're doing right now? Does oats stand out for a reason?
It does stand out. I don't know if I would be on the bullish side, though. We have to talk about oat futures as kind of being useless as a really real market. But in terms of cash bids, I was talking to somebody this morning, and they said, last week they were at getting, or was it 2 weeks ago? Anyway, fairly recently, they were getting, someone was telling them, one of the buyers was telling them to put in bids at 475. And then today they got a call that they were ready to do something, and no, it's 375. So that's not good. I mean, the way that we look at it is how much of our Canadian oats go to the U.S. And it's a large share. And not only that, but the very, very large share of oat products. So our Canadian oat millers are also highly reliant on what goes on in the U.S. So at the same, but if you flip it the other way, the U.S. relies extremely heavily on Canadian oats. So then you think, okay, well, what would their options be? And so we've been tossing those ideas back and forth and those kind of things. And well, in terms of importing from other countries, there's nobody else that really, maybe the Aussies a little bit, but they don't have huge amounts of production, and they're selling mostly to China. So there really aren't other options. People have asked about, Scandinavian oats. Those volumes are really small too, and they're all spoken for. So in the short term, they would need to pay the tariff. The oat users in the U.S. would need to pay the tariff because they have no other options. Mm-hmm. If you look ahead to the next crop, well, maybe they can encourage U.S. farmers to plant more oats to offset that. But you have to have the right price incentives. And if all of your oat mills are in Iowa and Minnesota, you're competing against corn and soybeans for those acres. Like, good luck.
Well, yeah, corn is doing its thing right now. It's having a heck of a run. So good luck, right?
So oats does make me somewhat nervous in that respect.
Yeah. All right, folks, for housekeeping this week, just a reminder that there is that grower event in Unity, Saskatchewan on February 20th. You can reach out to Taylor Wallace. You can RSVP. Lunch is provided. It's at the Unity Community Center from 9 to 3. Taylor's cell number 306-210-9954. You text that number to save your spot by February 7th. And that's today, actually. So do it tout de suite. Do it right away. You've got Kyle Sinclair with a market outlook. Trent Clarenbach's going to be there. Myers Norris Penny. And, of course, I will be there giving out some cool swag. and some beverages and having some fun with the crowd there in Unity. So I got that. The other thing I want to throw in here for housekeeping is so there was a round of job cuts out of Cargill here in Western Canada. Certain areas, my area impacted a lot more than other areas. And then there was a headline about ADM's financials. Their last reporting here wasn't great, and so they're doing some major cuts. And it doesn't have to say ADM there; it could say anybody. It's tough going out there, right? For farms and for folks in the farm industry. I spent some time working with some of the people that got let go this week, and I would just say to farmers out there, I know labor is tough. It's always an issue that comes up each and every winter here when labor is hard to find. I'm not saying that your next greatest operator is with this group of people, but you have some 10, 15-year people that know the industry very, very well and may have something to offer a farm from the business side. So, there's going to be more cuts coming. There's going to be good people out there looking for new opportunities. And heck, you might find a diamond in the rough out there or somebody phenomenal that can help fill a need on your farm. So, tough week for some folks with those job cuts, and I know they'll turn up and be just fine, but always stressful when you're in it, right? All right, I think that's going to be it for housekeeping for this week. All right, folks, time for positive moments for this week, my favorite segment each and every Friday, because it is Positive Friday. It is always Positive Friday with when the What the Futures podcast comes out. Okay, number one, we got through it temporarily. Like the Monday, the market was positive. The wheat market, the canola market ended up being positive on Monday. The people were calling for limit down moves on the weekend, and we ended it in positive territory. We come out on Tuesday with this thing getting kicked down the road, the tariff thing getting kicked down the road for another month. And it just, hey, I don't think we expected that, right? You listening, you didn't expect that. Here we are. So that's a positive moment. I got back from vacation as well. And we had we have a 2-year-old and a 4-year-old, and it's basically parenting in a different space. But we saw our 2-year-old Finley. He's flown a few times now. He's fantastic on the plane. You never know with that toddler rage what you're going to get. And so that was fantastic. And we saw both kids grow as well a little bit. Not just, I'm not talking about height, but, socially. We saw both kids out there making friends, and Finley's, his sentences now, it was 2 words. Well, now he's got 4 or 5 words he's stringing together, and he's really telling us what's on his mind. And that really came out on vacation. His communication just skyrocketed. So great time in Puerto Vallarta. I know we had farmers at neighboring resorts. We did not get together for a coffee and a market outlook. Maybe I should have suggested that. Coffee, crop marketing, iguanas. Next time. And lastly, positive moments. We launched a new app for the Lunchbox crew, and it's been in the works for the last number of months here, but it launched today, February 7th. And, it's just a way of more efficient communication and record keeping and tracking. So it was needed, and it's just nice to have it out. And it's not perfect, but it's definitely a giant step in the right direction. So looking forward to continuing that venture. And yeah, it's just really cool to see. All right, that's it for positive moments for this week. The other one that has been coming across my feed the last couple days here this week has been malt barley. Have you guys dived into malt barley at all to see if that's got implications or?
Well, Yeah, I mean, actually, I was just looking at it this morning. So yes, in fact, some of those numbers are still sort of in my head, which is
Nice.
a bit of a feat. But yeah, well, on the barley export side, China dominates our barley exports. Like it's like 85% of our barley exports go to China. And then this year anyway, or this last year, Japan was also buying some significant volumes, and the U.S. was in third place. They typically buy 150 to 250,000 tons of barley from us, and yeah, that would largely be malt barley. So no, it's not an insignificant market, but at the same time, you have the domestic feed of barley in Canada is about double what we're exporting in total to China and to elsewhere.
Okay.
So can we absorb 200,000 tons that we'd be shipping to the States back into our domestic feed supplies? Oh, in a heartbeat.
Yeah.
Especially if we're not buying corn from the U.S., especially if we tariff their corn coming north. That would be no problem. But the U.S. also is our dominant destination for our Canadian malt exports. So our domestic maltsters shipping malt, exporting malt, about 3/4 of it, I think, 2/3 to 3/4 is going to the U.S. And so that may reduce like what our domestic maltsters are putting through. And I forget what the tonnage is there, but it's for our maltsters. That's a meaningful chunk of business.
I got a message passed on to me from a maltster here from earlier this week, and it didn't portray a lot of confidence in a very robust program for 2025. And it just was like, we've got some commitments now. We're just going to hold on to that. And we're not doing anything else right now. We'll kind of circle back here, come back when we find clarity or find some type of, path forward. And it just, like you said, that's pretty big exposure. And, I guess we could pass that on to the beer drinkers as well, though, right?
Well, I think the bigger deal for the maltsters is not the U.S. situation, like the U.S. tariff situation at all. I mean, it is an impact, but they've been kind of down in the dumps for the last 2 or 3 years. And I don't know if we've talked about that here on the podcast, but consumption of beer is dropping in Canada and in the U.S. I mean, I'm not sure about elsewhere, but maltsters, they did shut down a big malt plant in the U.S. A few months ago, just because they didn't need the capacity. And so part of it is people switching drinks away from beer into other alcohol, these seltzers,
spirits, or like whatever,
whatever, right? That don't need multiple. And then you also have, and I don't know how big the move is, and it's particularly among young people about not drinking booze at all. So they're getting hit from a bunch of different sides. So the U.S. tariff thing is probably, it's not no worry, but it's not the bigger,
maybe short term, but not long term. Yeah. The kids, that are half my age out there. Like I know my nephew, he's like 22 years old, and he likes going out and stuff, but he does not consume very much. I have a few beers here and there, but not much at all. So a little different when I was that age. But as I think I have 240.
And you're about half my age, so
I have 240 beer to my left right now that are going to Unity for a grower meeting in the next couple of weeks. But
nice.
I'm doing my part apparently. Okay. I'll let you. Is there another crop that stands out to you right now in your research? I'll turn it over to you on that.
Well, I mean, if I just kind of run through the pulse crops, lentils would probably be the least affected. We ship some red lentils down there, but they don't, apart from Australia, they don't have a lot of other options for that. So I think that would be the least affected. And so that's that's among the pulses. Dry beans and chickpeas would be the most vulnerable to U.S. tariffs because we ship a lot of our exports of those two pulses are going to the U.S. Peas kind of probably somewhere in the middle, and again, that'd be more yellow peas. Green peas not so much affected by that. Mustard, of course, yellow mustard in particular would be severely affected. I was talking to somebody this morning and they were asking me, so what's your outlook on yellow mustard? I said, it's either going to be like completely flat or it's going to be like it's going to drop through the basement, or you're going to not even be able to find anybody who will give you a bid. That's nice. How bad it could get. But I mean, brown mustard, that's Europe. That's a totally different market. And Oriental, same thing. So those, so that one is one that's particularly exposed. I'm sure you've talked about or you've thought about canola and that part of the business as well too. Again, not a lot of other options. We don't ship much seed down there, but it could affect our domestic crushers because we ship almost all the oil to the U.S. and 60% of the meal goes down there as well too. So
you think the crushers are nervous at all about this, or there's been significant investment? Just a blip, you think, on the radar? Because I don't understand the whole biofuel blending credits and all that stuff, but their canola was not listed or exempt from that blending credit. I'm going to actually interview Susan Stroud here later this week to talk in depth about this type of stuff. But you think the crushers are just saying, hey, blip on the radar and long term the future's bright, or is there bigger concerns here?
Well, again, you think about, what can happen? How can the U.S. respond if they're automatic? All of a sudden, there's a 25% extra cost on this. Part of the biofuels thing, and again, I don't understand that all. And John has been down to biofuel meetings, conferences in the U.S., and even people down there go, well, we don't know. But,
perfect.
Wonderfully. Part of it is that a large part of the canola oil usage has been for renewable diesel, and in particular in California. So that's a state regulation, not a federal regulation.
Okay.
So that makes so Trump may not be able to do much to affect that kind of demand. But
sure.
Do they make adjustments if canola oil is 25% higher now? Do they make adjustments and so on? That's quite possible. John and I were talking this morning about the canola meal, because most of the canola meal that gets exported to the U.S. goes into the U.S. dairy industry, and they really like canola meal. It's supposed to give a higher milk output or something like that, even though it's lower protein. It's supposed to help improve milk output, whatever. So they really like it. They might keep buying Canadian canola meal. That's possible. But if that spread gets too wide, or that gets too expensive, they might start looking for other things. If a Joe consumer is looking at soy oil or canola oil in the U.S. on the shelf, they might make some shifts. They might make some choices too about what kind of oil they're buying and so on. So it does remain vulnerable as well.
And we can always go back
to shipping canola oil to China, but that's not a premium market. That's a lower price market.
Like the commercial side or the food industry side, like back in the day, working for a few different companies, but they talked a lot about their customers of KFC and McDonald's and who else, right? And all the big ones. And that also is a little bit of a challenge to raise prices. They do, but they're also usually pretty. Oh, it looks like I got a visitor back there, but they can get pretty mean at times. So,
well, one of the things that I find interesting in this whole thing is, you always hear about the cost of wheat in a loaf of bread is like 12 cents or whatever. So it goes up by 25%. It's 15 cents now for the loaf of bread. Whoopee! I mean, it hurts their margins, but like those kind of impacts are, to the consumer are relatively small. So they may not change behavior all that much.
Yeah. Okay. All right. So U.S. tariffs, I think we've talked a lot about, covered a lot of those different ones. Obviously, lots of unknowns there. The China canola tariff, that's been on the back burner now. Just keep it back there. Anything you're hearing on that one, or just keep it in the background?
It's almost been forgotten, and the Chinese, of course, now have bigger matters to deal with than Canada.
Yeah.
One of the things that I wonder about, this is my suspicious or cynical or whatever devious mind, is wondering because, and this is going to get political, so just
turn up the volume. Here we go.
Trigger warning or whatever. Is our current soon-to-be departed prime minister, has antagonized so many people, including Mr. Trump, but also the Chinese and India, and he's just it makes you wonder if these countries see that he's leaving now, and they may, maybe it may be a bit of a reset in Canadian relationships with some of these countries. Maybe that's my hope. That's my hopeful.
Yeah, maybe hope. Yeah,
and that could include India, that could include China, and because I think some of the issues, the reason why Trump has come down so hard on Canada is because it's deeply personal, I think, for him. Between him and Trudeau. So if there's a change in that, maybe it'll give us a bit of a reset. And anyway, that's my hopeful response.
Well, let's hope for that, and fresh personnel, fresh people involved. I don't want to say it can't hurt, but we'll knock on wood. That one. Yeah. Okay, Chuck. All right, so you're on the road, Saskatoon, Nipawin this week. I saw that you guys have, John has some hedging courses coming up this month. I'm seeing one here, February 10th to 12th, through Alberta Grains. Where's that one going to be?
It's down in Calgary.
Calgary? Okay.
Yeah. So I forget one of the hotels. It's on if you go to the Alberta Grains website, you have all of the information. Look under events and you'll see. So that's a 2-day session in, it was going to be 3 days, and then I think they've moved it now 2 days. And to be honest, like when I think about the possible risk, like when I look at risk in the market, like you can look at part of it is one half of it is the odds, like how likely is this to happen, and then the other is the size of the magnitude of the risk, and so those two are whatever, and so we have pretty good odds that we'll see some sizable risk in the market. And so for, canola or wheat or, for those ones that you can hedge, this to me is like kind of the textbook year where you should be doing something to reduce that kind of a risk. So I think that's doable. And then there's another session, a 1-day session in Manitoba in the small town of Niverville, and that's on February 25th.
February 25th.
For that one, you can you can just come through our website, the LeftFieldCR.com website, and you can find contact info.
February 25th.
Yep.
LeftFieldCR.com.
Righto. All
right. Perfect. All right, Chuck. Well, I wish you all the best on your drive up to Nipawin on those summer tires, on that puddle jumper you have. Thanks for joining the show. I look forward to seeing your tariff, I don't know if you're calling it a tariff report, but your weekly report on Friday. Look forward to seeing that and what you guys all have in there. And I'm assuming, I know you've been open to free trials in the past, letting people kind of take a peek. Hey, folks, if this might be one that you wanted to get dialed in and see what Chuck and John put together.
Reports by doing that. What I would say is we actually strongly want people to do the free trial. We'd rather they do that first than just sign up, because then they'll know what they're getting. Awesome.
All right, Chuck. Appreciate your time as always. Thanks for coming on the show.
All right, Ryan.
All right. Big shout out to show sponsor John Deere. Again, I'll turn your attention, folks, to harvestprofit.com. That is the farm financial software that you can use on your farm to help navigate the times in front of us. This stuff isn't easy. It's challenging. the decisions you're making have large implications. And we've spent time lately here, even more time this last week, just dialing in some of our scenarios here for 2025 in Harvest Profit. It's a tool that we use to track our farm financials and links up fantastic with John Deere Operations Center. So if you're already doing the JD Ops thing, check out harvestprofit.com and give that a look, especially if you want just a little more peace of mind as you create your 2025 farm business plans. All right. Thanks a lot to the folks over at John Deere for being such a great sponsor. All right, folks, let's get into what's on my mind here for crop marketing. And we don't have a mailbag sponsor at this time, I should say. If you are interested in sponsoring the mailbox, let me know. But I did get a couple of questions here from some growers. And I got a question about new crop wheat basis. So this is going to tie into what I put in the email as well. Sorry, I'm just looking it up here. I'm looking up, where did that come in? There we go. So the question that came in was, our Canadian US exchange is reading, at the time it was about 68 cents. It's now, as of recording, around 70 because tariffs got kicked down. Should we be looking at some new crop basis contracts, or is the tariff too much of a risk to have any new crop aggressive basis bids to have any new? So anyways, what we'll say here is, should we be looking at new crop basis contracts for wheat? Okay. So I believe I've talked about this in the past, but today's example in, just outside of where I live. Okay. There's 1.5 companies out there that will let you lock in futures and your currency exchange at the same time. Patterson is one of those. The other one, it used to be Grains Connect. I know they listen to the show. We'll see if they send an email to clarify. But back in the day, they would let us lock in futures in the exchange. And so the example I had today, and the other companies out there, they put the exchange in their basis. Okay. So today's example was, so Patterson, locking that in, let's just do one right now. Let's grab one right now because the market's been moving around. So 665 is December Minneapolis spring wheat. And I've got a 1.4307 on the exchange. 307. That's a 951. Futures, wheat futures, and exchange. And I'll get back to basis in a second. All right, 951. I had a chat with that location. I said, hey, give me your average. Just give me an average like basis. And it's a negative basis. Just give me the average. So the basis is a representation of the local market. Is there a lot of wheat in that area? Not a lot. How's demand doing? Do they have trains coming or not? How's full's the facility? That all impacts basis. The cost to get it to Vancouver, all this stuff, that's all in there, right? And so we came up with our number. We came up with 54 cents. $8.97 a bushel. All right. For number 113.5% protein wheat. This was 25 cents better yesterday. But $8.97. Okay. October delivery. I went to the neighboring elevators. All right. And I talked to one grower too. And the grower said he asked for an $8.50 from the neighboring elevator, and they laughed at him and said, yeah, good luck. So guess what? He sold some to Patterson. So yeah, joke's on you, other grain company. And then I got the Viterra number was, for October was 816 for number 113.5. And they suggested you could try an 850 target. So what is happening here is that the grain companies will stomp their feet on this one. But they would say, we don't know. We don't have anyone phoning us to buy wheat for the fall, so we don't know how to give you a basis out there. So I would say, I'd argue the bids out there are safe bids. They're bids, basis levels that they feel are, they don't mind owning wheat at those levels. They're cautious, but they're not a true representation of what's happening. So the question came from Evan, like, do I lock in new crop wheat basis? And the short answer to that is yeah. When the Canadian dollar is trading at these levels, the lowest since 2003, yeah, you should be locking in wheat basis. The problem is it's February and you're not going to get a very good representative offer for the fall. You're not going to get the true meaning, the true basis that should be offered to you. So if this was in April or in June where this was all aligning, then yeah, it would make even more sense to do it. So, I would consider looking at targets for basis. I would definitely consider starting and getting some stuff locked in. And you say, well, Ryan, you complain about basis contracts. You always talk about how basis contracts are scary and terrible and never to do them. And that is true, folks. That is true. You definitely need to consult with your local professionals out there, because this is going to bite me in the butt. Because I don't know who's all listening to this, but you have to have the discipline to price those futures. So I don't mind in this environment, in this setup of this current wheat market, having a basis contract. The problem is I have the discipline to price the sucker sometime this spring, or even in the next couple of weeks here, depending on this rally. And I hope you do too. Because if you just say, I got a great basis, and you ride this thing with record Canadian wheat acres and a phenomenal crop, you're going to be upset. You might have a good basis still, but you'll be upset about your futures and your net price. Prairie farmers want to plant more wheat in 2025. I don't necessarily understand why, but that is the messaging out there, is they want to plant more wheat in 2025. And so you could look early on here if Mother Nature's going to hold all the cards, but the production, yeah, like there's the chance that we have a highly productive year and a big crop. And again, it's February. I can't predict the weather and tell you what's going to happen, but it's something to be aware of, that farmers want to plant more of this stuff. So all signs point to, yeah, we should be locking in basis. Should we be doing it in February in Northeast Saskatchewan or in Southeast Saskatchewan or in the Peace region? Oh man, it's getting close. It's getting close to doing something. But you're just not getting that true representation. So that's where I would dangle that target out there and say, hey, let's do some math here. Like right now, if we want to do the Patterson example, like that's 80 cents a bushel difference, right? 80 cents a bushel. So if you want to take that number and say, hey, I'm not taking the 816, but with the 80 cents here, if you can get close to that, I'll lock in that basis, right? That's just about $30 a ton. So that I think that was a 57. That's got to go to like an $87, $85 basis, something like that, to be competitive. And that all day long. Off the combine, or in the fall, let's call it October instead of off the combine, but an $85 basis. Yeah, do that all day. That'd be one of the best basis you've ever locked in. But I can only do it with Patterson right now. It's at the point where Patterson's going to buy some business this year because farms will not sit back and wait for the other companies to step up. Don't worry. Those other companies, they're not sweating about it. They're not nervous about it at all. They don't care about market share right now. They're not worried about it at all. Don't worry about them. They'll be fine. They'll tell you all. They'll buy the wheat anyway. But, if you want to figure out some of the best pricing opportunities, again, this Patterson thing is interesting. It's only February, though. The wheat futures are just waking up, right? We still have tariff risk. The Canadian dollar could still be under pressure. I don't think you go guns a-blazing on that strategy right now. I think you keep it in your hip pocket. I think it's very, very intriguing, but don't forget momentum and where we're at in this. You wouldn't go guns a-blazing on that strategy yet either. You just get familiar with it and be ready to execute. So Evan, great question. And I talked in circles a little bit, but yeah, wheat basis is definitely on the radar. I always get nervous when a bunch of us do wheat basis together because we tend not to all win together. So just be cautious, be very cautious. And yeah, I think it'll be a topic that we'll cover many times here over the next couple months for sure. All right. What else did I get for? I got a question about Europe and canola. And yeah, so European rapeseed market is trading at a large premium to the Canadian canola market, which is true. That spread has been very, very wide, historically wide. Is this specific to Clearfield, or can canola be shipped into Europe? All right, so if it is just Clearfield, should we be seeing a more aggressive basis for it going forward? So Clearfield canola, I've had a bit of a soft spot for Clearfield canola because it's classified as a non-GMO canola. So Clearfield canola into Europe could go into the food industry. The other canola that we would send there, that would go into like biofuels, right? And so it goes into that market instead. So when you see a non-GMO canola, and again, if I'm wrong on this, please correct me, but that's where that can go into the food side, and our other canola is just going into the industrial side instead. I'm not seeing a bunch of extra demand for the specialty canolas, I haven't paid a lot of attention to those premiums lately, but I know it hasn't stood out for me at this time. So no, would you see a more aggressive basis for Clearfield? No, I don't think so. Not at this time. I think it's pretty standard out there at this moment. But those are how those two markets will act a little bit different. Everyone's trying to get you guys to sign up your acres to qualify for shipping into Europe. Just because of the threat of China tariffs and U.S. tariffs as well. So they're getting their ducks in a row here to be able to move this canola into the industrial market in Europe. Again, that's how I see it. If I'm wrong, I'm sure someone will send me an email on that one. All right. What else did I have come across here? I'm going to keep that one for the next time. So yeah, I'll say that's kind of the two that came across here this week. Thought there might be another one. I do want to just dispel a rumor here as well, or not a rumor, but just the suggestion. So I was told that, you could no longer do the futures first contract at Patterson, which would tie in that exchange rate. But I was on the phone with Patterson this week, and you certainly can do that all the way into March of 2026. So if Patterson's in your wheelhouse, you're probably a farm that is considering making some type of wheat play here. If they aren't in your wheelhouse, not in your delivery zone, then you're frustrated and trying to get G3 or Viterra to be more competitive out there. But it's just a good way to do your calculations, folks, to figure out how currency is impacting or exchange is impacting your wheat price, and you gain a little bit of perspective and clarity around more accurate pricing. All right. Okay. The other thing on my mind here for crop marketing, I've kept things pretty cool the last week or so through these tariffs. I've been presenting calm to the people I work with and farmers I work with, and I said it in past episodes as well, where, not looking at that market for a week or sitting on your hands for a week could pay dividends. Who knows as we go and move forward, but just remember, folks, momentum, focus on the momentum. And, we are now seeing some of the highest wheat prices, of the year. Like, if you want to reward those, that's fantastic. Like, when I got offered $6.32 a bushel for wheat off, right after harvest, and was told, you got to sell. This is the price. It's not great, but it's not going to get better. And, all of a sudden we're $2 plus, better, 3 months, 4 months later. So, it's there's some momentum here. Stick to your plan, and there's no shame in rewarding rallies and especially at profitable levels, like taking advantage of that. But just try to park some of the noise here, because nobody knows how it's going to play out. And in the meantime, you may regret that a sale or pressure sale or whatever it is. I know this industry in Western Canada, you guys get a lot of negativity and you get a lot of pressure tactics on you from the grain side of this industry. That's the way it works in Western Canada. But tell those folks to bugger off, take a hike, stick to your plan, write some stuff down on paper, review it, execute your crop marketing plan. Okay. And, let's try to avoid the noise. So that's what's on my mind here for crop marketing this week. Alrighty, for eating your veggies for this week, I have, I'm going to write them down here as I'm recording, but, the first thing I would recommend, and eating your veggies, it's the right thing to do, or that's the slogan anyway, is, a crop rankings calculator. I don't know if you have one yourself, but I've been playing with crop rankings this last week, and I've been doing my version of tariff exempt crops or tariff free crops or whatever you want to call it. But just making some adjustments. We've seen some specialty crop prices come out and get more aggressive. We saw maple pea price climb, green pea prices climbing. We saw some other malt offers come through. There's been a lot of different wheat prices have climbed. So just starting to tweak my crop rankings calculator, and a few different crops that have stood out as leaders. So if, I think it's a very good exercise, for you to do as well. And so I'm going to put that down as number one, for eating your veggies, to just refresh your crop power rankings, and even make one, in regards to tariff crops that will not be, or will be least impacted, against crops the most impacted. All right. Give that, seeding plan a little love here in early February. The second thing I have for this week, I would say from a sales perspective, I do think that as basis levels on wheat approach some historic values, here's some very strong opportunities for the fall. Like, I would recommend that you have some targets out there, that you don't take face value on those basis targets, but you would consider those, and maybe, again, use the math we talked about in the episode to come up with what makes sense in your region. But you should be looking at locking in some of your best fall basis that you have ever seen on your farm. Like that, if you see a number and you're like, man, I don't remember that. I don't remember ever seeing that. That's a good thing that you want to consider. So I'm going to say basis targets for wheat, for hard red, and for CPS. I do like that. And my last one, I'm going to give a shout out to those folks out there with, I'll give a shout out to JGL, number one, on the brokerage side. But, as Chuck mentioned earlier in the episode here, we we have a year ahead of us that is full of whiplash headlines, and you have tools available, for you when it comes to a crop marketing plan. But again, if you're hesitant to look at opening a futures trading account, you don't do futures, you can do options. But the folks at JGL Capital, reach out to those types of people and open up that toolbox for yourself. Give yourself a chance here to make, maybe decisions that are less stressful. Maybe you take a bit of stress off knowing that, hey, I can sell canola and just figure out a strategy to remain bullish if the opportunity presents itself. I can, go and maybe there's a strategy against protecting against a higher Canadian dollar so that you allow yourself some of the best basis opportunities on wheat. Like, there's lots of things that those folks look at. And I just think, I'll say it every single year. It doesn't matter what the circumstances are, but it just opens up your entire portfolio here, your entire toolbox for a successful crop marketing plan. And hey, avoid the noise. All right. Number 4 for this week, avoid the flippin' noise out there and look at momentum. All right. That's eating your veggies for this week. All right, folks, that's it for episode 62 of this week. A big thank you to Chuck Penner for joining me and talking tariffs, the topic on everyone's minds. But thanks for joining me, Chuck. Appreciate it. Thanks to you for tuning in to the episode. And hey, that's it for me. Episode 62. I'm out.